Okay, hello and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer. None of what we talk about in this podcast or any of our other materials should be taken as investing advice. We're going to be talking about some very, very risky topics on this podcast and just in general. And James or I could have positions in any of the stocks or securities mentioned. And we may or may not choose to change our positions at any time without notice. So make sure you do your own work and do your own research and consult an investing professional before making any investment decision. So with that being said, the topic of today's podcast is going to be Friday's live stream by Keith Gill, aka Roaring Kitty, from the 2021 GameStop short squeeze. This was his first live stream since the original 2021 short squeeze. And we're going to be going into detail and in-depth analysis about his actions, what he said in the live stream. This live stream was extremely highly anticipated and covered by the financial media and many other people, very highly viewed during the actual live stream. But despite the insane amount of hype around it, GameStop actually had one of its worst days in history on that same day. So some very, very, very interesting things to unpack here. Before we get into the details, just real quick, it would mean a lot to us if you would like to support what we're doing. If you would like to check out differentiatedanalytics.com, which is our website that provides a lot of resources for investors, including our own original short selling research that you can access through the website, and also get access to our Discord server. So with that being said, James, what was your main takeaways from this live stream?
Yes. So I guess before we get into what Keith Gill said on the live stream itself, it's important that we just take a step back and look at the situation that's been happening around GameStop over the past about the past month now. So this whole thing started off on May 13th when Keith Gill posted this meme here of a guy leaning forward. And this was his first tweet in about 3 years. And this catalyzed a massive increase in the price of GameStop. So this chart I have here on the right, the the bars at the bottom are the number of social media posts Keith Gill has made each day. So, see, prior to May 13th, there was 0 posts from Keith Gill. And then the yellow is GameStop's share price each day. And you can see, obviously, there are gaps in that due to weekends and exchange holidays. So we can see the GameStop price was at about $17 going into the weekend. Keith Gill starts tweeting, and then the GameStop share price starts increasing. That was the catalyst of the rally. We can also see that it wasn't just this first tweet that he did. He started tweeting prolifically over the first few days of the rally. So he would, tweet 13 times a day, then another 13 times a day. Then on the 15th, he tweeted more than 30 times. And then, 25 and about 25 times the next 2 days. And he would post, large numbers of these tweets that were mostly just memes that were like clips from movies and television shows and stuff, and things with like photoshopped cat faces, just kind of memes that it's hard to understand what the meaning of them were. But due to the fact that GameStop is indeed a meme stock, and you have the leader of it, Keith Gill, posting all these memes, that creates a lot of interest from retail investors who bid up the price. Now, then after May 17th, Keith Gill goes silent for a couple weeks, doesn't post anything. And during that time, the price of GameStop falls down a bit, as there's no longer Keith Gill drumming up interest, so the interest from investors kind of decreases a bit. Then we see he starts making more social media posts, around here, the price starts increasing again. And then here is where he does the YouTube, live stream. So this peak right here, this is actually the day before the YouTube live stream, and that was when it was set as scheduled. So when you go on YouTube and look at his channel, you would see that the YouTube is so as of June 6th, you could have gone onto the YouTube channel and seen that the live stream was scheduled for June 7th. So even though the live stream did not happen until June 7th, the everybody knew that it was going to happen on as of June 6th. So that's why we got the massive increase in price on June 6th, which was in anticipation of the live stream. And then when the live stream actually happened on June 7th, uh, it was sort of a buy the rumor, sell the news kind of event, and the price actually tanked, as Ryan alluded to earlier. Now, the point of showing all of this is that the over the past month, GameStop's share price movements have been very much related to Keith Gill's social media activity, and this really shows the very large amount of influence Keith Gill has. Okay, so in addition to tweeting a bunch of memes on Twitter, Keith Gill also made a number of posts on Reddit on r/superstonk, where he just posted screenshots of his E-Trade account showing what his positions were. So, prior to this, the most recent screenshot he showed was from April 16th, 2021, which was at the tail end of the original GameStop short squeeze. And in that update, he showed that he owned 800,000 shares of GameStop, which this is adjusted for stock splits, which had a market value of $31 million at the time. He also had $3.5 million worth of cash. So at the time, his entire portfolio was worth $34 million. Now, since then, the price of GameStop has actually declined. So, had Keith Gill just held his 800,000 shares of GameStop, he would have lost a lot of money because GameStop price has declined during this time. But if we look at his update as of June 2nd, 2024, the value of his account actually skyrocketed up to $210 million. And that includes, he has 5 million shares of GameStop. So his number of GameStop shares has massively increased. He also had 120,000 options contracts, which were worth $66 million at the time. And then he had $29 million of cash, adding up to $210 million worth of assets. So how is it possible that he was able to increase his account value so much from 34 million all the way up to 210 million? Well, if we look, take a deeper dive and look at exactly, what these positions were. So as of June 2nd, 2024, he had these 120,000 contracts of call options expiring June 21st, 2024. And if we look at it, as of June 2nd, he actually had a small unrealized loss on these call options. So this strongly indicates that, at least in my opinion, that these call options were likely purchased between May 13th and June 2nd. Because if they were purchased before May 13th, GameStop's share price was a lot lower back then, so he probably would have had, a massive unrealized gain. But the fact that he has an unrealized loss makes me think that this call option was purchased subsequent to May 13th. And, we'll get into why this is relevant later. And an article came out from the Wall Street Journal, and it was, the Wall Street Journal one is behind a paywall, but this story has been republished by a whole host of other news outlets. According to employees of E-Trade, Keith Gill started buying options on GameStop prior to the rally that he himself induced. So assuming that this report is true from these E-Trade employees, these E-Trade employees are saying that Keith Gill started buying options at some point prior to May 13th. And then we suspect that these options here were purchased after May 13th. So the options that the E-Trade employees were referencing had to have already been sold or exercised as of June 2nd when the post has, when he made this post. So then we can kind of get to understand how he had one possible, theory about how he was able to increase his account value so much. Let's say, let's say he only had this, $34 million as of, a month ago. And then he takes that, he sells all his GameStop shares. He has a bunch of cash. He uses that cash to buy a huge amount of call options, somewhere around here. Then he makes his tweet. The price skyrockets. He sells all those options at a massive profit, and then that gives him a massive amount of cash. And then he uses that cash to purchase 5 million shares of GameStop, and then this new call option position he shows here. That's why he doesn't really have these despite the rally in GameStop stock price, he's not really showing, any massive unrealized gains because potentially these positions were purchased very recently. If he only was able to generate the cash to buy those positions from trading call options during the initial pump on May 13th. Again, that's just a theory, but that could potentially explain how Mr. Gill was able to amass such a huge amount of money. And then so it comes to the June 7th live stream, and I've watched through it and collected sort of the main points that he talks about. The first thing he says that his social media accounts, his Twitter and Reddit accounts, they were not hacked or anything. It's all him. He himself was the one posting all the memes and all the E-Trade screenshots. And then he says that he's not working with anybody else. All of the money in his E-Trade account is all from his own personal funds. He's not managing anybody else's money or working with anybody else. He says he says he has no other positions other than the GameStop positions that he disclosed. And then he said one thing that was kind of weird, kind of interesting, because as the live stream was going on, GameStop's share price was tanking, and Mr. Gill said, talking about stock prices, they go up, they go down. You can't explain that. So he is saying that stock prices go up, go down. Who knows? Who knows what's going to happen to a given stock? It's like out of anybody's control, which I think is a bit ironic for Keith Gill to say, given that he's the one who catalyzed a massive rally in GameStop. So if anybody is able to predict stock price movements, it would be him because he's the one catalyzing them, at least in case of GameStop. So it's a bit strange of him saying, nobody can control stock prices. They go up and down. You can't explain it. So I just thought that was kind of weird. One thing that he said. Then after talking about those, he talks about the fundamentals of GameStop. And it appears that he is bullish on GameStop fundamentally. He says that GameStop is in transformation mode. That in the long run, they will, somehow transform the business model to be more sustainable compared to their current core business, which is declining. Keith Gill is supportive of GameStop's CEO Ryan Cohen. He says that GameStop is in a good position because there are so many retail investors who are rooting for GameStop to succeed, and he appears to think that this will help GameStop, like as a business. I guess possibly Possibly the thinking is that retail investors who own the stock may be driven to shop at GameStop, maybe. It's unclear what exactly the mechanism is, but he believes that the fact that a lot of people are rooting for GameStop will somehow help GameStop to perform better operationally. And then he says, because of all the meme rallies, GameStop was able to raise billions of dollars of cash. Keith Gill is hopeful that Ryan Cohen and GameStop's management team will be able to deploy that cash into some, into some new ventures that will be successful. So that was basically what he said on the live stream. And when the one thing to note is he specifically was talking about saying that he is not working with anybody else, and all the money in the E-Trade account is his own money. And the reason why he says this in particular could be that he's responding to criticism from Andrew Left. So Andrew Left is a very well-known activist short seller. He was the target of much ire from retail investors during the original GameStop short squeeze because he was short GameStop back in 2021. But now he's come back with this, now that Keith Gill has resurfaced, Andrew Left has come back and disclosed that he's short GameStop again. And he has made some statements to the media where he is highly critical of Keith Gill, and he said that he suspects Keith Gill is working with somebody or managing other people's money, and that is the only way Andrew Left could think to explain how he was able to amass $200 million to buy the positions that he has. Because, if going back to 2021, Keith Gill only had $34 million. How is it the case that he can purchase positions worth $200 million today, or as in 2024? The only way Andrew Luff can think to explain that is if he's managing outside money. And then Keith Gill, specifically on the live stream, refuted that, saying, "No, I'm not managing anybody else's money." Now, I personally, this is just my opinion, but I personally think Keith Gill is probably telling the truth here. And, as we talked about earlier, one theory of how Keith Gill was able to amass the almost $200 million to purchase his positions was if he bought a bunch of call options before he bought a bunch of call options before the rally began and was able to cash out at the top for huge profits. And we can see here in the days leading up to the rally and the days leading up to Keith Gill's first tweet, the share price of GameStop, was increasing quite strongly. And if we believe the Wall Street Journal report from the E-Trade employees, Keith Gill was buying call options of GameStop around this time, and he had presumably millions or tens of millions of dollars, which he could have been using to buy call options. This could have, catalyzed this buying pressure from Keith Gill could have catalyzed a rally in GameStop's share price in the days leading up to May 13th. And then that put Keith Gill in a position to profit massively after the rally began. Now, you can think of that as kind of front running of Keith Gill front running his followers potentially. And this is basically a transfer of wealth from Keith Gill's followers to himself. And the reason why that is because his buying pressure in the days prior pushed up the price of GameStop shares. And then so when he does the tweet and all his followers start buying shares of GameStop, well, now they're buying it at an inflated value because Keith Gill himself has already pumped up the price a little bit. So that's why front running is, potentially a very bad thing for Keith Gill's followers, but a good thing for Keith Gill himself because he was able to amass, such an obscene amount of money. This is, again, we don't know exactly what happened, but based on kind of the circumstantial evidence and based on the report from the Wall Street Journal, with the E-Trade employees saying that he was buying call options prior to May 13th, it seems to be, a possible theory of events. So now, in addition to analyzing what Keith Gill was doing, another thing is to look at what GameStop itself was doing. So whenever there's a meme rally, this is obviously a great opportunity for the company itself to issue a bunch of shares. As of May 4th, GameStop had roughly 306 million shares outstanding. Within within a couple weeks of the original rally, um, on May 24th, GameStop sold 45 million shares, generating proceeds of $933 million, which is about $21 per share. So GameStop took advantage of the rally to raise almost $1 billion. On June 7th, which was the same day as Keith Gill's live stream, GameStop put out a press release saying that they intend to sell another 75 million shares. But those shares, they just say that they are planning to or might sell these shares. They have not yet necessarily actually sold them yet. But let's just look at the first one, the one from May 24th, which we know that they've already sold. So if we add that, they've diluted the share counts by more than 10%. So now, as of June 6th, GameStop had 351 million shares outstanding, and they have $2 billion of cash. And because as of May 4th, they already had about $1 billion of cash on the balance sheet. Then on May 24th, they raised another 933 million. So, as of June 6th, they have about $2 billion of cash. And then, you know, both the amount of cash and the share count are likely to increase further if they indeed sell these 75 million shares. But just as of now, we know that they've, have at least $2 billion. If we multiply that 351 million shares multiplied by the $28 share price, which is the price of GameStop share price as of the time of recording this video, GameStop's market cap is $10 billion. Subtract the $2 billion of cash on hand, and the enterprise value is about $8 billion. So, is an enterprise value of $8 billion reasonable for a company like GameStop? And the answer is probably almost certainly no, because GameStop's core business has been imploding. The revenue has been declining very quickly, and the company has been trying to cut costs to offset the revenue decline, yet they've only been either barely breaking even or losing money. They have almost zero profitability, and the revenue is declining. Um, as we did a previous video about GameStop last year, where we talked about the fundamental reasons behind why GameStop's core business is declining. Basically, with the advent of the internet and with the advent of like the Xbox Live Store, the Nintendo eShop, etc. These days, people can just download video games directly onto their device, onto their console, which is way more convenient and a superior experience in a lot of ways. So then, given that this is this new form of purchasing games, you no longer need to go physically to the GameStop store to buy a disc. So that's really a big problem for GameStop, and this is only going to continue getting worse, most likely. And we can see that in GameStop's revenue numbers. So this is a business that appears to be in terminal decline. Now, as Keith Gill says that Keith Gill says that Ryan Cohen, the CEO of GameStop, he's been able to raise this $2 billion, and with this $2 billion, he's going to create some new initiatives or some new ventures that are going to turn everything around. Well, as we talked about in our previous GameStop video, all of Ryan Cohen's growth initiatives have been embarrassing failures. The two main ones were uh, they were trying to push into e-commerce. This was mostly a failure, and they tried to do a bunch of weird stuff with crypto and NFTs. Those were also complete failures. So if you haven't already, you can watch our previous video, which is linked in the description below, where we talked about GameStop, about the fundamentals of the GameStop business, and it all looks very bad. Overall, this whole saga with this recent GameStop rally, I think, really shows how dangerous it can be to be one of the uninformed retail investors who are just blindly following whatever trend and jumping on whatever meme rally they see on social media, because you never know what's going on behind the scenes. And while we don't know exactly what happened with Keith Gill here, um, it doesn't look good. Having this Wall Street Journal report with the E-Trade employees saying that Mr. Gill was buying call options in the days leading up to his tweet. And we can see that the GameStop share price was increasing on a higher than usual volume, also leading up to that tweet. So you never know what manipulation is going on behind the scenes, and that's why for most of these meme rallies, if you look at the general public, the retail investors, a lot more of them lose money than make money. So always be careful. Somebody like a Keith Gill, he developed kind of a cult-like following. He went and testified before Congress. A lot of retail investors viewed him as, a nice guy, somebody who is fighting for their interests. But is that really the case when he's, buying these options before he puts out his tweet and he's making, $200 million on these options? When Keith Gill is making all these tens and tens of millions, almost $200 million of profits. Well, where is that money coming from? At the end of the day, most of that is coming from retail investors who are buying into GameStop after him and who are going to end up holding the bag after the rally dumps. So, be very careful. Always be skeptical of people, especially someone who's, very, very in a very high profile position like Mr. Gill is, and he has the ability to, have a massive impact on GameStop's share price. He has used that, his influence and ability, to profit handsomely for himself. But you as an investor, any investor, you want to make sure that going to uh, you are not going to be taken advantage of by people like Keith Gill, who might be who might be just trying to make a quick buck off of his followers.
And just to pile on to that last point, I feel like this in 2024, it's a different situation than 2021, right? Where in 2021 you can make a reasonable argument that a retail investor kind of going along buying GameStop alongside Keith Gill could have reasonably made money along with him. Um, but now is a very different situation. Like that, the first time, um, the short seller, the short interest was a lot higher, and the short selling hedge funds got burned. And as the stock market has a zero sum game, like that money could reasonably have gone from the hedge funds to retail investors. But in this case, there is no short squeeze, and Keith Gill, um, it seems, bought this was buying GameStop before he made his post about his meme posts and posting his positions and stuff like that. So in this case, the money is going from the market to him rather than from anyone else, like institutional short sellers or anything like that. So that's just a just because if people could have made money back the first time around in certain ways, this in 2024 is much different.
Yes. So you always have to be careful, because yeah, as Ryan was mentioning, the short interest back in 2021, I think, was over 100% of the shares outstanding of GameStop were sold short. Going into this most recent rally, I think it was only something like 20% of GameStop's shares were sold short. I'm just going off of memory there. But this recent route, while the 2021 situation was indeed a short squeeze, what we had here in 2024, this was not a short squeeze. This was retail investors buying in. Uh, that's based on the Keith Gill's tweets, and that's really all there was to it. It was just a meme stock rally driven by the frenzied buying pressure from retail investors, and then those retail investors who pumped up the price, well, they're also going to be the ones holding the bag on the way down. So, um, That's about all we have to say today about GameStop. As always, if you have any opinions, please let us know in the comments section below. And we will see you all on next week's video.